Well, folks, this is not a good situation. I'm going to show you here today what's going on social media in regards to Elon Musk. The hatred has reached all-time high levels. People are now saying, go key Tesla cars. That's what they're saying at this point in time. People are liking these sorts of posts. Going to be pretty shocking what I'm going to show you in this video here today, okay? Then I want to go ahead and play you this crazy 30-second prediction this gentleman, Dan Nathan, makes in regards to Tesla and the Cybertruck and how it's going to be the biggest flop ever, okay? From there, we'll take a Tesla break and we'll react to this one here. Brian Belsky, who has made some pretty good moves over time. He just made some big moves in his portfolio. I thought we'd react to that. Talk about that, and then after that we'll react to this one. Tesla needs to evolve product portfolio to grow further, says Oppenheimer. So we'll react to that one. Appreciate you guys joining me. Thanks so much for being here as always. I appreciate each and every one of you. Thanks for being subscribed. Okay, so I made this post. This was a day or two ago. I said Tesla stock could be highly volatile the next few days. FYI, anyone own Tesla. So I said, right? This is on Threads. And what did I get? Stop kissing Elon's ass before you take the same reputation hit he did. What? Kissing his ass because I said Tesla stock's going to be volatile over the next few days and asked if anybody else owns Tesla? Wow. Okay. Well, that's interesting. What was I supposed to say? Hate Elon Musk. Does anybody own Tesla stock? Hate Elon Musk. Like, what am I supposed to say? Like, what are we talking about here, right? I'm seeing several posts that were identical to this. Wealth of Elon Musk. He's the top one there, right? So many likes, so many replies. 3 words: steal from the rich. I mean, tax the rich, right? This is like the viewpoints of people out there right now. And of course, the first name they list on all these different posts. And I saw basically the same post posted like so many different times on there. It was pretty fascinating to see. I see this one, Professor Galloway. It's a failure of a system that one person can amass this much wealth and power with no guardrails, he says. And people love that. Yeah, Elon Musk should not have this much power and guardrails. This person says he's off his meds, right? This person says, how can we make a guy like this less relevant to the U.S. economy and national security? This person says, okay. I mean, do I even need to explain to what this post is? Like, this is the type of stuff we're seeing out there, okay? This one says, looks like the rich man baby will have to pay for all of his dumpster fire now, which is talking about X and the advertiser situation, things like that, right? This one says, looking forward to the days when Elon buys a Desert Inn, sits in the penthouse suite naked, eating butternut ice cream while storing urine in glass jars. Psycho Musk. People are like, yeah, Psycho Musk. This just, talking about Musk and, trying to obviously paint him in a negative light. This is my favorite one. By the way, a lot of these same people that are hating on Elon Musk are a lot of them are the same type of people that are supposed to be for the climate, which is very interesting because Tesla's been by far and away the leader in the world when it comes to climate and sustainable energy and all those sorts of things. And it's just fascinating to see, those same people, hate on Elon Musk now at this point in time because obviously he comes across as he's a different political party than a lot of people like now at this point in time, which is intriguing. This is even more ironic. This is like, I love this, okay? Walmart's the latest advertiser to pull ads from Elon Musk's X. Why do I love this? It's not because Walmart's pulling ads. It's because this puts so many people in an awkward situation. Because just this year, a lot of people started boycotting Target. And they said, I'm going to Walmart. Well, now Walmart's pulling all their ads on X. And Elon Musk says if these advertisers keep pulling their ads on X, X is going to fail. Like it's going under. That's what Elon Musk says. That's what's words out of his mouth. So now if you go to Walmart, you're basically supporting that Walmart pulled their ads and is going to potentially kill X. So now what do? Do you keep shopping at Walmart? Or do you say, now I'm going to go back to Target and start shopping? Or do you say, well, now I can't shop at Walmart or Target and now I got to go to Amazon? This is why you don't get into all this bullshit, man. All these people get into all this BS and they're like, I'm going to boycott this. I'm boycotting Elon Musk. I'm going to boycott Walmart. I'm going to boycott Target. And they're like running around in circles and they don't even realize how stupid they look. They don't realize how stupid they look. You got people that are supposed to be for the climate that are now hating the number one company and the number one individual that is for the climate. I mean, it's so ironic, this whole situation, right? You're seeing posts like this, key all Teslas. This is the only national movement that will get this billionaire to quit tearing down democracy. Jeez, he's tearing down democracy now at this point in time. Wow. Okay, interesting, right? Yeah. Wow. That's all I got to say. Wow. Okay. So yesterday I'm looking for the event, right? The Cybertruck event. So I type into Google Tesla Cybertruck or Tesla, whatever I typed in, right? And what's the first things I'm greeted with right off the bat? Like the first things that pop up on Google. Check this out. Get ready for Tesla Cybertruck delivery event to totally flop. The Verge, getting close, but not too close to the Tesla Cybertruck, basically trying to take shots saying there's a bunch of imperfections in the Cybertruck, blah, blah, blah. This one, where the Tesla Cybertruck has missed the moment, they say, right here, okay? Just negative article after negative article. If that wasn't enough, right? Here we go. CNN, 4 reasons why the Tesla Cybertruck already lost its advantage. Wow, it lost its advantage. Really interesting. Tell me more, CNN. This one, the Tesla Cybertruck is the dumbest thing I've ever seen. And these are all the top, like when I Googled it yesterday, like these were all the top posts showing up, right? I said, I've always seen some negative coverage of Tesla from Wall Street, but not mainstream media. They used to have his back, and this is truth. Like, it used to be a very different situation. Like, back in the day, you could always count on Wall Street to hate Tesla. And I'm talking, when I say back in the day, I'm really talking about when I was first investing in the stock, like 2018, 2019. You could always count on hatred from Wall Street, always negative things in the analyst community, negative, okay? But, mainstream media always seemed to have Elon Musk's back. They built him up. They usually said a lot of positive things. And because he was for the climate and he was for, definitely leaned back in those days, it seemed like he leaned toward one political party versus the other political party. He got a lot of very positive coverage in mainstream media. And then it would be a divergence, because then you would go and you would look at Wall Street, what they were saying, and it was so opposite, right? Now it almost seems like the opposite situation, where he gets so much bad publicity in the mainstream media, and then Wall Street seems to almost have his back more. So it's almost like a flip situation now at this point in time. But it's very different, okay? Now, I want to play this prediction this gentleman makes here. This is pretty crazy. Dan Nathan.
So, Dan, what would you want to ask Elon Musk?
The kids call it the CT on the Twitter, okay? That's the Cybertruck.
Oh, okay.
I think the Cybertruck is going to be the new Coke of EV launches. I think it's going to be the Apple Newton of EV launches. I think it might be the Edsel of EV launches. And I'm just saying, the kids on the Twitter are like talking about the CT like it's going to transform the story. This is going to be the thing for 2024. So I just don't think it's going to be that thing.
And I mean,
Wow. So, yeah, basically saying Cybertruck's going to be a huge flop. No one's going to want it and those sorts of things. And I think it's delusional. Because it just doesn't pay attention to any facts. We've never seen the level of interest and buzz on a vehicle ever in history. The next closest thing would be Model 3. And then I don't even know what's number 3 after that. And probably Model Y. And then what's number 4? It's so far down there you can't even see. Like, Cybertruck has by far and away the most hype I've ever seen from any vehicle. It's getting far and more attention, talk, debate. I love it. I don't love it. I hate it. Elon Musk. Whatever, okay? But the bottom line is, it's already arguably one of the most famous vehicles in the world. And, like, like people don't even own it yet. Like, isn't that incredible? Like, arguably the most famous vehicle, certainly in North America, but in probably much of the world, because all this stuff goes viral all over the internet in general. And, like, it's not even on the road right now. Like, it's just starting to get on the road, right? The delivery started obviously yesterday. So fascinating times. And to make a prediction that this is going to be a huge flop when it's getting more coverage than any vehicle in history, I think that's a dangerous, but these sorts of folks are always negative. Dan Nathan, I've never seen him be positive on Elon Musk or Tesla in general. So, you got to kind of take it for who it's coming from. Let's just put it that way, okay? Alrighty, next up here, Brian Belsky made some big moves in his portfolio. Let's react to this one, and then we'll get into this Tesla video here.
The day, and he gave you his macro view, but he's actually rebalanced his book, and he has a number of new buys and sells. So, Brian, let's go through these. Good to see you, and thanks for coming back on to share these with our viewers. In terms of your large cap disciplined value fund, you bought Boston Properties, Disney, Fifth Third, Goldman, Merck, Qualcomm, Regions, U.S. Bancorp. I think it's very interesting that you bought a bunch of regional banks, which were the center of the storm some 6 months ago, but here we are. Tell me about those first, the regional bank moves that you made getting in to those.
Well, thanks so much for having us, and you're being very righteous and nice to Steve today. It's a tough day for him. We're funding some of this by selling Netflix. We bought Netflix in June of last year as an opportunistic value call of 2022. I'm sorry, it's up 171%. So we're funding some of that. And as you know, we've been big bank believers for a long time. And we just want to diversify out a little bit, especially given the fact that if you take a look at price correlations and valuations and yields, Bank of America, Berkshire, and the brokerages look very good. And JP Morgan, we're using some JP Morgan to fund some of this. And I also think, too, of our theme of everything in moderation, own a little bit of everything, it's time to start looking at some of these regional banks that we think are very well positioned over the next few years.
Yeah, I don't know how much I agree with selling Netflix to put in, let's say, a JP Morgan, because the issue is with somebody like a JP Morgan, the longer rates stay in an elevated place, the longer you can get good money, good returns on treasuries, good returns certainly on savings accounts, I think it puts more and more pressure on JP Morgan for assets to potentially leave JP Morgan, right? The longer you can get 4% plus from a savings account other places, I think the more likely people are to move money to other financial institutions, whether that be the Marcus product from Goldman Sachs or whether it be to Ally Bank or SoFi or whoever. And so I think that puts JP Morgan at a risk because JP Morgan's still not paying crap on their savings accounts. Like, it's a joke in terms of what they're paying out. So I think the longer rates stay up here, I think the more and more likely it is that a company like JP Morgan either has to start actually paying good returns on CD accounts, on savings accounts, or they're going to potentially lose more and more folks over to other, financial institutions. Like, I'm somebody that banks with JP Morgan. I'm just like, why do I want to keep that much money on Chase when I can go get good returns somewhere else with that money, right? And make potentially hundreds of dollars a month or even thousands of dollars a month in interest versus keeping it on Chase. So I think, that's something that needs to be considered out there.
So aside from that, the buying Goldman, buying Citi, and selling JP Morgan, what's the thought process?
He's selling JP Morgan?
Behind that?
I thought he was buying it.
Okay, so if you take a look at, let's just talk about...
What it sounded like to me is he was selling Netflix to buy JP Morgan. That's what he was saying.
And the correlations and how JP Morgan trades relative to Bank of America and Berkshire, we're already covered there. And Citigroup, from a value perspective, the cheapest stock on a PE basis, almost a 5% dividend yield. I love what Jane Frazier's doing over there in terms of reorganization. You want to buy a big bank like that when they're cutting costs. They brought in great management like Andy Sieg from Merrill Lynch and Bank of America. I really, really like that play. And I really think it's a contrarian bank. If you talk to a lot of the big institutions,
one of the things I'll say about the financials, and this reminds me of... I've been talking about the time period we've gone through over the last few years. I've described it as it could be we're in a 2002, 2003 type time frame over this last couple of years, right? In terms of when you came down from the tech bubble and the stocks crashed and then you bottomed out the market, right? Well, coming out over the next few years, coming out of that, 04, 05, 06, like the financials had a great run. Real estate obviously did tremendously well and actually created a pretty big bubble that obviously needed to be popped, but banking did very well. So maybe we're going to go into a next few years here where banking is maybe the outperformer of the bunch, right? Before we get ready for 2007, 2008 in a few years from now, right? So I don't know. That's something I've kind of considered that, the last few years kind of reminds me a little bit of that 02, 03 into 04 type time frame.
From that, and they've invested in Jamie, and Jamie has done a wonderful job. It's up 16% this year. Citigroup's still down, or it's actually just up 2%. So, you want to be able to go where I think the opportunity is going forward, and we're already covered in the really big money center banks like, let's call it Bank of America and Berkshire.
And why'd you buy Disney?
And by the way, Goldman Sachs, I think that's an interesting buy. And the reason being is, you should, let's assume the market continues to roll on and, we get a lot of strength in the market over this next 6 to 9 months. I think you'll likely start to see IPOs come to market in 2024, the back half of 2024 specific, which obviously bodes very well for somebody, in the investment banking space or somebody like a Goldman Sachs, right?
Well, we've been on the network and talking about Disney. We were really early in our tactical portfolio by buying Disney. I still think Bob is going to get this thing right. He's going to create some sort of a scarcity proposal for Disney. He's already talked about cutting content and cutting the Marvel films. Only one is coming out next year. So I think I like management teams. I was a little early buying Disney in my tactical portfolio. But I think in communication services, as we want to play more of a bar with respect to the...
So I don't think Disney's necessarily a bad buy, but Disney has a lot of problems. They're still working through those problems. Now they're part of the canceled trade because Elon Musk called them out in his big interview. And so I hear that supposedly thousands of people are canceling their Disney Plus packages or whatever. Oh, my gosh. People are going to realize they're going to need to cancel every company. Like I'm just like, it's ridiculous at this point in time. But, it is what it is. But anyways, Disney not a bad buy, but they still got a lot of mess to clean up over this next. I would say it's going to last another 1 to 2 years in terms of the mess cleanup and right sizing the company and getting everything in the right direction. So, Bob's still got his work to do, his work cut out for him.
Like Netflix and Google, and on the other side, some of the traditional telecom stocks like AT&T and Verizon. We think Disney's in a sweet spot. So I'm probably a little bit contrarian here, but I believe in Bob Iger.
Some of the other moves that I think are interesting here. So you bought Qualcomm, you sold Cisco. I want you to tell us why, and then I want Jimmy to comment on that.
Well, I think Cisco may be over its skis a little bit on the cybersecurity side of things. They may have overpaid, and I think the stock has slipped a little bit. Cisco is a great value name within the technology sector. I think Qualcomm's a little bit better value. Plus, what we're doing in our overall semiconductor position, Scott, for 2024 is, we're going to remain kind of core positions in Apple and Microsoft. I think with NVIDIA and AMD, what we're trying to do is play more of a barbell. So for every AMD position, we want to match it up with a Qualcomm, and for every NVIDIA position, we want to match it up with a Broadcom. That's why we added Qualcomm.
I like that guy. I like that guy. I think he does probably pretty good run on his portfolio. I like him. I can't say that for everybody I always see on here. But that guy, I actually like him, and I like to hear kind of his perspective on what he's up to with his portfolio and things like that, okay? All right, next one up here. Tesla needs to evolve product portfolio to grow further, says Oppenheimer's Roush.
Analyst Colin Rush. He has a hold on the stock. Colin, you heard what Phil just talked about. Give me your reflections on the Cybertruck, but even more importantly, as we head into the new year, in terms of what you think the demand will really look like for Tesla's automobiles overall.
Yeah, I think Phil's take on this is generally in line with our view. So first, the company really needs to evolve the product portfolio. They've established a very strong foothold in the vehicle market, and to grow further here, we really think they need to evolve the product portfolio. So totally in agreement with that. I think there was some nice technology validation in this vehicle from the torque and some of the powertrain elements.
Before we go further here, evolve the product portfolio. Why? They're growing extremely fast still, despite dropping price and despite the industry being in a really tough place, obviously with interest rates being very elevated. I think if we had much lower interest rates, I think Tesla's growth rates would be just astronomically high right now. So let's not confuse a tougher time period. It's like saying in real estate, right? Real estate homes haven't been moving. Like we had some of the weakest housing numbers in terms of amount of homes being sold. I mean, even worse than like the great financial crisis, which is crazy to think about, right? And it's like saying, well, it just needs to fix itself somehow. It's like, well, have you seen mortgage rates? Like mortgage rates have been like 7 to 8% here recently, and everybody's gotten used to like 3 and 4% mortgage rates. So when you go 7 to 8, that's a huge deal. Same thing happens in the auto market. Almost everybody buys a new auto on a loan, right? And so interest rates are extremely higher. So I don't think that gives an accurate representation on if Tesla's doing good or not good when interest rates are just significantly higher. Like if you pull up a chart of the auto loan percent just in the past 18 months, it is like, if you was a stock, you'd be like, this is the best stock in the creation of mankind, okay? So that's nothing to do with that's just out of Tesla's control. And despite that, they've still been doing very well.
Well as the steering capacity with the by-wire being integrated. That's not necessarily new technology, but having it integrated really helps enable some of the autonomous applications down the line. And I think that the company's at a crossroads here. It's disrupted the industry, forced the industry to move towards a certain technology node, and now driving that incremental share towards something that we think investors are anticipating is something on the order of 15 to 20% market share. Really is going to involve an awful lot of hard work, and that's why we're on the sidelines here. That this is going to be harder for longer than I think a lot of folks expect, and we're expecting margins and growth to be a little bit muted here over the next couple of years.
Yeah, and against, of course, this backdrop, at least, of what seems to be slowing demand or growth, certainly, for EVs. The other day, Andrew Sorkin, of course, talked to Elon. I'm not sure it was necessarily asked and answered, but it didn't really get answered, certainly, this question is whether there is a significant slowdown. Do you believe there is, in terms of just what's left of the population wanting EVs?
So I think there's a misconception here. Growth in both China and Europe has actually been quite strong for EVs, and
EVs are taking market share every year. Every year for the last many years, EVs take market share, and it'll be no different this year. EVs will take market share. So that's just a ridiculous statement. Next year, guess what? EVs are going to take more market share from internal combustion engines.
A strong North American bias for a lot of investors in a lot of the reporting here. And I think the U.S. market certainly has a product market fit issue that the OEMs are working through. And so the slower growth in EVs in the U.S. is not a huge surprise given, where the appetite and the interest and real needs for consumers are in this country. So EVs, we're not, backing away from our bullish growth perspective. We just think it's coming from different geographies. Now, the redesign and kind of evolution of product portfolio is going to take some time. We're kind of on Gen 2 plus in terms of the vehicles that are on the road. And I really think Gen 3, when you go through a disruptive cycle, is really where products get right with the markets and really start driving volume. And I think we're in process on those Gen 3 vehicles here.
Understood. But again, back to overall worldwide demand, you point out Europe, that's a lot of the Chinese EVs, if I'm not mistaken. And then in China, Musk himself has said it is an incredibly competitive market, is it not?
I think both those points are well taken here, and that's part of our concerns around margin. Like, Tesla continues to be a real technology leader and driving cost out of these vehicles from a design and a manufacturing perspective.
Elon Musk put it best. He said, if you sell a compelling product, people are going to buy it. And the bottom line is, in the U.S., the other companies just haven't sold a compelling enough product to their customer bases. And so that's why Tesla just continues to have massive market share and will continue to. So appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed to the channel. New all-time high subscribers. Much love and have a great day.